Hi everybody, Frank Finance here. Hope you're having a wonderful day. Today we're going to be doing a stock analysis on Starbucks, ticker symbol SBUX. Alright, so for today's agenda on Starbucks, I'm going to give my price target for the next 12 months. We're going to look at 2021 Q3 results and key earnings news. We're going to look at growth for Starbucks going into 2022 and 2023. We're going to look at the fundamentals and financials. We're going to look at the stock price history over the last several years and what we anticipate in the future. And also we're going to look at dividend information, any news on potential hikes. And then lastly, I'm going to give my thoughts on Starbucks. So currently my price target for Starbucks is $110. Now that's below what they're currently trading at. And although they did beat earnings today, which we'll talk about here in a moment, I still believe that their price has run up and has definitely gotten above itself and has kind of run past what it should be priced at currently. I'll talk about some of these factors throughout the video, especially in the final thoughts section. So if you want to skip to that, go ahead. But if you want to stick around throughout the whole video, some of the reasoning behind those thoughts are inside of the video. So let me know what you think in the comments below. All right, so looking at fiscal year 2021 Q3 results, analysts had Starbucks reporting 77 cents. They beat that by 20 cents. Or 26%, and they reported 97 cents earnings per share. Really great beat there on the EPS side. On the revenue side, Starbucks reported $7.5 billion in revenue. Analysts estimated 7.25, so they beat by about $250 million, or about a 3.4% beat there. So overall, really good earnings. All right, so looking at some key takeaways from the press release. So as I said earlier, 97 cents EPS per share. On the non-GAAP side, it's a little bit higher at $1.01. So that would indicate it would be higher than a 26% beat on the non-GAAP side. Another here, raising full year fiscal 2021 margin and EPS guidance. If we scroll down a little bit here, a little bit more than a little bit, Q4 fiscal guidance, global comparable sales growth of 18 to 21%. Again, this is compared to 2020 pandemic sales. Same thing with comparable sales growth, up overall, international in the mid to high single digits, and then comparable store sales growth roughly flat in China. The other thing I want to point it out here is they're reiterating the fiscal year 2021 guidance, approximately 2,150 new store openings, 1,100 net new Starbucks globally, approximately 600 net news are in China, and this interest expense of approximately $470 to $480 million. If we scroll down here, announced yesterday the company's agreed to sell 50% ownership in Starbucks Coffee Korea. So they're just kind of selling interest of that over there, selling partial ownership of it. And then in May, just reiterating that they would transition 350 freestanding company operated stores, approximately 20% of portfolio to 100% renewable energy. And yep, that's about it. The board reiterated the cash dividend of 45 cents per share. We'll talk a little bit more about dividend in the dividend section of this video, but that's really all I saw that stuck out in the press release today. As we transition into the growth conversation, we have to recognize that Starbucks actually had a decrease in revenue during the pandemic. Now we can see with this trailing 12 months that they have actually started to go back into that upswing, and their projection for 2021 full year is actually higher than it was back in 2019 for the full year. So that's good. We're kind of on a path back to growth. Now, if we look at growth over time, we can kind of see that the clip is kind of in that upper single digits. So it's kind of gone up and down, kind of a little bit of roller coaster. A few years of low growth considering they're a fairly large company. And then it would go down and then back up. So these are quarterly. This is by quarter, but point is that they've definitely had some slower years and bigger years. Obviously, they had a very big drop during the pandemic, and this growth estimate of 11% is 11% off of the 2020 numbers, not off of the 2019. So with that being said, we would need to compare what their growth is or what their revenue is going to be for 2021 full year as compared to the 2019 levels, not to the 2020. All right, so when we look at growth for Starbucks, we really need to look at the analyst expectations for revenue over full year 2021. So they're coming in at $28.8 billion for the full year. When we compare that back to 2020 numbers, that would be a 22% growth between 2020 and 2021. Now, that seems incredible, and the reason why it does is because it's a little misleading in the fact that there was a decrease in 2020 of revenues, and so it definitely falls outside of the range of normalcy for what their normal growth rate would be. If you compare their revenue, their estimate for 2021 to 2019, it's about an 8% growth rate. Now you have to keep in mind that's 2 years for 8% growth, okay? So just keep that in mind. Between 2019 and 2021, there was 8% growth. That's what the analysts are expecting. Now, things look a little bit brighter. Between 2021 and 2022, analysts are expecting about a 9%, which really is about their average, or really around what is a normal range for them when we looked at that previous graph I shared about what they expect quarter over quarter. So 9% looks about average for them. And for a company the size of Starbucks, 9% isn't too shabby. So I like to see that. Nothing wrong with 9% growth. Hey, if you're still here, please hit that like button. Helps me out a lot. Thanks so much. Back to your content. All right, so looking at the financials, if we look at total revenue from 2017 to 2018, they increased the revenue by about 10%. 2019 was about 7%. And obviously, as I discussed earlier, there was a decrease in 2020. We're expecting about an 8% increase between 2019 and 2021 full year. If we look at gross margin dipped definitely during 2020, and then so did EBITDA, as well as the net income margin dropped down to a very, very small 4%. We're hoping to see that recover back into this range of 13 or 18%. All right, so next up I want to talk about free cash flow and calculate some price to free cash flows for the last couple years. All right, so if we look at the market cap, it's sitting at $148 billion. Looking at cash from operations in 2018, it came in at $11.9 billion. Capital expenditures were at $1.9 billion. So they had free cash flow of about 10. So at $148 billion market cap divided by 10, we're sitting at a 14.8 times free cash flow, looking retrospectively at today's market cap. Now we know that the market cap has definitely expanded quite a bit. So retrospectively, that number would have been, that multiple would have been considerably lower because they're trading at a premium today. If we look at the 2019 number, so we have 5 billion minus 1.8, so we have 3.2. So we do 148 divided by 3.2, we get about a price to free cash flow of about 46.25. Substantially high for a price to free cash flow. Again, this is looking at the 2019 numbers, which hadn't seen the dip from COVID. You got a pretty big difference year to year, just looking at that. And so just keep that in mind. It just doesn't seem right. And then looking at 2020, we have this very, pretty bad situation, at least from the price to free cash flow. You only had about $100 million worth of free cash flow, and so that ratio is going to be way out of whack. Another thing to note here is that if we looked at price to free cash flow for 2021 estimate, if it's going to be somewhere around the 2019 levels, let's say it's optimistic and it comes in at $4 billion. So we'll have a $148 billion market cap if everything stays exactly the way it is right now. Divide that by $4 billion, and you'll have a price to free cash flow of about 37, which is very high. You want to see that somewhere around 20% probably. For their growth rate, maybe a little bit higher, but honestly, for Starbucks, pretty established player, around 20 would be considered fair, I would say. one of the things that just seems out of whack and very strange with Starbucks is the price to earnings ratio. So if you look at the history, it's sitting at about 150 right now. Historically kind of been trading in that 30 range. There was a time period in 2018 where they were trading in the higher teens. And then again, in the 30 range, leading up into through the pandemic. And then there was just this really sharp increase in price to earnings, and it's just kind of skyrocketed to where it sits today at about 150. So this is very strange. Something to think about. Hey, if you don't mind, just go ahead and hit that like button. It would help me out a lot. Hit that like button. Thanks so much. Back to your content. All right, so next up, let's talk about the price history of Starbucks. So if we look at the last year, they're up about 64.87%, so that's not bad for just a 12-month period. If we bring that a little bit further out, let's look at the pandemic. So if you bought around $89 right before the pandemic started, you saw a drop of about 35% within a few days, probably a couple weeks, and you're probably a little scared. You saw full recovery with it by October. So within 6 months, you had all your money back. And then 6 months, 7 months out from there, you're sitting about 40% up. So not bad. If you got lucky, timed this really well, and bought in the $58 range, you're up 117% since the pandemic started in March of 2020. So, within a year and a half, you've done really well. Good returns there. If you bring that out to the 5-year range, up 117%. So, that's just crazy. So the guys down here have gotten the same amount of returns as someone who bought, back in 2016, 5 years ago. So both very good returns, but just, the time period in which the return was given is different. Now, if we take that out to the max, I kind of wanted to look at the return for investors who got in during the last rough patch back in the 2008 period. So, if you got in back here around in the $5 range, you're up 2,500% almost. Really good rate of return there over the course of 12, 13 years. Pretty good, really good rate of return there. So if you're, I would say early investor there, you did really well. Even if you bought it back kind of in the high in 2006 when it just kept failing and failing, all the way down 73% at one point from 2006 to 2009. And then even if you held it then, you're up 573% over the course of about 15 years. So a little longer time horizon, still not a terrible rate of return there for 15 years. Moving over to dividend news, currently Starbucks has an annual dividend of $1.80. Their dividend yield is at 1.43% annually. And over the last several years, around this time, around September timeframe, they actually increased their dividends. So we're kind of getting up that. I don't expect the announcement during the earnings call. It could very well happen, and I wouldn't be surprised. But typically they make the announcement after the earnings call, maybe a month or so from now, or actually a few days from now. So we'll see. I have to wait and see what happens, but I am anticipating probably a dividend increase of anywhere from 3 cents to 5 cents. So that's going to bump the dividend yield somewhere to the 1.5% yield at their current prices. So just keep that in mind. That would take the quarterly dividend up to 48 cents to about 50 cents, just depending on how much they increase it by. So just keep that in mind. That's definitely on the horizon. I don't think that will, I think that's a pretty good bet there that dividend will be increasing really soon. All right, so overall, Starbucks looks like a decent company. Their revenue looks good. Their growth looks solid. I have a couple concerns though. We see these elevated price to earnings. The price to cash flow looks a little high in my opinion. And these two things really make me a little nervous. If we look at their stock price history, just looking at that as well, we've seen very strong returns over a short period of time, and that's great to see. I'm so happy for everybody who's been able to enjoy those rides up. But with those elevated ratios that we're looking at combined with these returns that seem a little too good to be true, it makes me a little nervous as, if I was a potential investor in Starbucks right now. And it just seems a little bit overpriced. It almost seems like they're pricing in a recovery for Starbucks, overly over recovery. So back to normal, sure, Starbucks is going back to normal, but are they a 20% growth company? No. Are they a 10% growth company? Yeah. But it just, the price to earnings is just not historically in line with what it used to be. The price to free cash flow is a little out of whack. There's several, and they're not even resuming their capital expenditures what they were back in 2019 levels. So the price, the free cash flow might seem bigger, but the CapEx is lower. There's some trade-offs there. You really need to pay attention to this kind of stuff. I mean, I'm a little nervous about Starbucks as an investment, and there's nothing wrong with that. Now, the dividend is increasing. If you've been holding them for, you've been holding them since 2009, the dividend's great. I mean, you got a really solid yield. Your yield's probably around like 20-30% on your initial investment. I mean, that's awesome, right? But if you're going in at a yield around 1.5 right now as a dividend investor, for me, that's just not attractive for me, right? The yield isn't very high. Chasing yield is kind of a loser's game anyways, and the capital appreciation is really what I care about, getting those long-term gains on my investments. Unless I'm just doing some trading, in and out of a stock, then I don't care so much about that, obviously. But point is, with Starbucks, I'm obviously not doing that because the volatility is not there for me to really want to trade around in. And with with these ratios, I feel like are out of whack. Just wait till things kind of die down. The whole recovery trade, I think, is going to cool down. Some of these names are going to get a little bit of a reset, and that's going to be good for the investors overall. Not the people who are buying at the highs. It may take them 3-5 years before they fully recover, get back to where they are, and that's unfortunate. But I think it's a little bit overrun. Things are a little bit pricier than they should be right now, especially compared to where they're trading. I mean, they're barely getting a little bit higher. I mean, if you look at their growth between 2019 and 2021, it's like 4% a year, and that's not compounded. That's just average. That's just an average growth rate, right? 4%. That's not very good, especially for them historically. So, and then even looking into 2022 cash flows, I get it. We're looking at future cash flow streams for our valuations, but still, I just can't see the justification here as to why, their price to earnings is near 150. It's crazy. Okay, let's just say historically they should be trading around that 30 P/E. Even that seems a little bit high for them, but they are strong, large companies still growing. So I understand. But even if it was in the 30 P/E, maybe different recommendation, maybe a different, how I feel about this stock. But, overall, still a good company. There's nothing wrong with Starbucks fundamentally. They're going to be around for years and years to come. They're pretty cemented. They have solid market share. All the good things you want to see in a company to be sticking around with for your lifetime. So, if you're going to be holding this for a very, very long time period, and you just set it, forget it till in the next 30 years, Starbucks is still going to be there, in my opinion. So, be a good investment. But anything short, I mean, you could lose in 5 years on Starbucks, in my opinion, just because of the overpricing that I believe is in the name at the current time. Please consider subscribing. Let me know what you think down below in the comments. Don't forget to like. Thanks so much for watching today's video on Starbucks. Frank Finance,